Hi, everybody. I have Nick Olczak from First State Bank here with me today for a Talk About It Tuesday. How you doing, Nick?
I'm good. How are you doing?
I'm doing great. I'm glad I have you here to talk about a loan product called a bridge loan that you're an expert on, that you're always giving good advice on and helping clients with. So I'm glad you're here with me today to talk about it.
Yeah, thank you for inviting me. I'm excited.
Awesome. Okay. So first things first, what exactly is a bridge loan and how does it work for homeowners?
Yeah, a bridge loan is a tool for us to get from selling a client's house to buying their new house. What a bridge loan does, it taps into the equity that they have in their current house, and we use it for the down payment on the next house. So it allows them to buy before they sell. It kind of just flips the process. And as we go through this, I'll get more specific on the ins and outs of it. But in a nutshell, we're pulling equity out of that house and just using it for the down payment on the next house.
Okay, so we're allowing homeowners to have the opportunity to buy their first home first and then sell their current home. So it's a great opportunity and it helps you to put in offers without contingencies. So
Yeah.
it's a good thing. How or who is a good candidate for a bridge loan? Are there income or equity requirements?
Yeah, no, it's a good question. So there's a couple groups that a bridge loan is specifically for, right? You got your step-up buyers who have been in their current house for a while. They've built some equity. Maybe their family is growing. They've outgrown their home and need to, buy the next house, right? Upgrade. And then you have your downsizers, right? The ones who have been in their house for a long time. Maybe they've been in it forever and they own it free and clear and they have all that equity and they're ready to downsize and, just settle down, buy a smaller house. Those are the two main candidates that a bridge loan is for, right? Because it's going to be for your second, third, or fourth time home buyer. It's not going to be a first time buyer. And then income requirements, no, it's just standard conventional mortgage. That's all we're doing is a standard conventional mortgage. And then equity requirements, yeah, they got to have at least 25% equity, right? If they just bought their house 1 or 2 years ago and made a minimum down payment, they're not going to have enough equity. They're barely going to have any equity. Typically, they got to be in their house at least 5 to 7 years to build a decent amount of equity. Um,
Okay,
yeah.
that's good to know. How long does bridge loans typically last, and what happens if the home doesn't sell in that time?
Yep. Most bridge loans are included, are for 6 months, right? So once we close on the new house, the bridge loan is going to be active for up to 6 months. So you got 6 months to get your house sold. Once your current house sells, it's the bridge loan plus interest that gets paid off. And then we're all done with that bridge loan. And all you got going forward is that new house and that mortgage payment. So 6 months.
Okay, that gives you plenty of time to sell
In this market, I think so.
for sure. Um, what are the typical interest rates and fees for a bridge loan? Are they higher than a regular mortgage?
Yeah, I like this question. So interest rates on our bridge loan, right? There's no monthly payments on the bridge loan. There is just interest that accrues when we close. And then once that house sells, it's the bridge plus interest that gets paid off. That rate is 6.75. It's slightly below market, believe it or not. And it's been like that for a while. We're not changing the rate. It's 6.75 interest only on our bridge. The fees for our bridge are what really give us the advantage when it comes to bridge loans in Michigan. It's $1,500 broken into two parts. 500 bucks out of pocket. Nothing gets paid until we're in underwriting. 500 bucks out of pocket and 1,000 bucks comes off of the bridge loan itself. So let's say the bridge loan is for $300,000. Take $1,000 off it and it's for 299 instead.
That's pretty
It
awesome.
it doesn't get much better than that. Most lenders are charging 3 to 5% of the purchase price in fees just to do a bridge loan. Ours is a
Wow.
flat fee.
So they're like double closing costs there.
No double closing costs. Yeah, there's no extra set of closing costs with our bridge loan. It's just the normal closing costs for the purchase.
Okay. And then that's a good thing because I think people get kind of nervous also thinking about a monthly payment where you're only having to pay the interest and not two monthly
Yeah, and
payments
they're
when you're out there
right. And
buying.
they're not even making payments on the interest. It just accrues and it gets paid off when their house sells. They're literally their only monthly payment going forward is a new house. That's it.
Okay. So there's just simply the 500 out plus the $1,000 that they deduct plus
Yep,
whatever
the thousand
that it
off
was
the
on.
back end. Yep. So there's 500 bucks out of pocket, no matter which way you look at it.
That's awesome. That's a great product. And like you said, other mortgage companies might offer the bridge loan, but it does seem that First State Bank does have some like better ways and a more
We've
affordability for
streamlined it
people.
for sure. Yeah.
Yeah. Okay, that's awesome. Um, what happens to existing mortgage during the loan process? You already kind of covered that they don't have to make the payment.
Yeah. Yeah. Yep. Not making payments on the mortgage because we're paying it off, right? When we close on the bridge loan, we pay off that mortgage. So they don't have to make any payments on it, right? They're still responsible for taxes and insurance until they sell the house, but the mortgage is done, right? So when their house eventually sells, the payoff comes to us now because now we are the lien holder because we have the bridge loan, right? But that mortgage is gone. We take care of it. They don't got to worry about it anymore.
Okay,
Yeah.
awesome. Um, what is the application process like for a bridge loan? Is it faster or slower than a traditional loan?
It is the exact same. The approval process is the exact same. All I'm doing is approving a buyer for a conventional mortgage. And that's something to keep in mind. Conventional buyers only. Minimum credit score is 680. So I'm just approving them for a conventional mortgage. And then if they have enough equity, then we can explore, the bridge loan option.
Okay,
Uh, not to get into the weeds on, the nerdy mortgage stuff, but, like I said, 680 credit score minimum, 45% debt to income ratio is where we cap it off. And then we're not counting their current mortgage payment and their new mortgage payment against their qualifications, right? Because that would make it difficult for them to qualify. We're only going to be counting their taxes and insurance from their current house against their debt to income.
okay,
Because, like I said, even though we pay off the mortgage, they still have taxes and insurance until they sell the house. So we got to include those.
okay,
Um, but even that, it still doesn't make it, very difficult for buyers to qualify.
okay. So it's conventional loan, 680 credit score, 45% DTI. So
Yep.
cool. So you know the facts. That's straight to the point. Okay. I have another question. Are there any risk involved with a bridge loan that sellers should be aware
Not really. I mean, I guess the only risk would be, if your house didn't sell within 6 months. Out of several years of doing this bridge loan, we've had that happen once. Like I said, obviously it's not common in this market. There's still a lot of demand out there. And let's say worst case scenario came, 6 months goes by and their house hasn't sold. All we're going to do is extend it and then ask them to start paying back the interest that's been accruing.
of? Okay.
We're not in the business of taking people's houses or anything like that. We're just going to extend it and ask them to pay back the interest. But other risks, I guess there could be one other risk. Let's say the appraisal for the bridge loan comes in lower than what we think their house is valued at, then that's going to affect how much money they get from the bridge loan. Um, if you'd like, and maybe there's another question down the road that we haven't gotten to yet, as
Oh,
far as, start to finish, how the bridge loan works, as far as where do we get that value from, right? We can get into that later. But
well,
risks,
you go ahead and answer that now because I kind of just been going with the
sure.
flow because you answered a few more that I kind of skipped over.
Okay. Yeah. So the biggest risk would be not selling the house in time, but their house getting appraised for a lower value than what we think it is, right? Giving them less money from the bridge loan to use for the down payment. So how the process works, before we get approved, before we get an offer accepted and get into underwriting, I talk to you, the realtor who's going to be selling their house, and you do your comps on their house. And you tell me, based on your comps, what you think their house should be valued at, right? And I do my own little bit of background work too. And 9 times out of 10, if you know what you're doing, your comps are going to be pretty close and we don't have any issues. But what we do is once we're in underwriting, once they get an offer accepted, we order a separate appraisal on their house. That's, one of the things that the bridge loan fee covers is an appraisal on their house, right? We have two different options for their appraisal. The $1,500 fee that I talked about, that's covering a desktop appraisal on the buyer's current house. And all that is an appraiser is taking comps online and doing a quick drive-by of their house, right? So if they had done any upgrades inside the house, the basement, the back of the house, the roof, whatever, the appraiser's not going to see those things, right? It's 90% just going off comps. So that's why we ask you to do your due diligence. And 9 times out of 10, it's fine, right? But if we're in a situation where equity's tight and the client needs every penny they can get from a bridge loan for the down payment on the next house, we have a second option, and that's going to be $1,800 instead of 1,500. Still 500 out of pocket, but it's 1,300 bucks off the back end, and that's going to do a full appraisal on their house, inside, outside, everything, right? I like that option because it gives you, the realtor, and the client a very realistic expectation of what their house should be worth when you're ready to list it,
Right.
right? Um, but that's pretty much the biggest risk is if an appraisal comes in a little bit lower than we thought and they get a little bit less than what they wanted to from the bridge. Most of the time when we're doing bridge loans, the client has more than enough equity. It's not often where we have super tight scenarios, but we do have another option, for those situations.
Okay. Well, thanks for explaining that.
Yeah.
Um, are there any common misconceptions about bridge loans that you like to clear up?
Yeah, absolutely. I always tell people when they call me and they want to learn about a bridge loan, I'm like, look, stay off Google. When you go on Google and you search bridge loan, it's going to scare you off. It's going to tell you that it's expensive, the interest rates are bad, it's a slow, sloppy process, all these negative things, right? And Google is great. It's a great general tool for general information, but buying a house is very specific. Every single situation is different. And it's no different when we're talking about bridge loans. It's a very specific program that we have, mastered, and Google can't account for that,
Right.
right? So misconceptions are that it's expensive, it's going to come with high rates and fees, and it's going to be a slow, drawn out, clunky process. Reality is nothing like that. It's just a standard purchase transaction. Bridge loan is getting underwritten at the same time as the new mortgage, so we're not losing any time on the deal.
Yeah.
And
Google
buyers save.
and Chat GPT makes everybody a professional in
Oh
what they're
gosh,
doing.
we
So,
could make a whole other video of buyers scaring themselves out of doing things because of ChatGPT.
man.
Yep.
Um, are there any alternatives to the bridge loans for sellers who would want to buy first before they sell?
Yeah, the biggest alternative would be a home equity line of credit, a HELOC. Um, the downside to that could be higher rates, and also if they're using that HELOC to make a down payment, a lender has to use the payment on that HELOC against their DTI, right?
Mm,
If you're pulling out 50 grand from a HELOC, there's going to be a minimum payment attached to that, similar to a credit card. And then we have to use that against their DTI. Sometimes that could cause issues with getting qualified. Sometimes a HELOC might just cost more. Every situation is different, but generally I've seen HELOCs cost a little bit more than what our bridge loan is going to cost. But that's the main alternative, a
mm,
HELOC.
all right. I think I know the answer to this, but I'm still gonna ask it. Do you recommend bridge loans often, or are they more of a last resort tool, and why?
Oh, yeah, definitely recommend them often. And they should not be a last resort because the biggest selling point of a bridge loan is removing that contingency from your offer, right? Anybody who's been doing this for a minute knows that in multiple offer situations, the contingent offer is going to the bottom of the pile every time.
Yeah,
Um, so yeah, this is going to remove that contingency and strengthen that offer a ton. So yeah, I talk about it every day. It's one of the few programs that I truly believe in that is worth talking about every day. It's worth me calling agents every day and like, hey, do you know about our bridge loan? Because it's going to help you, the agent, do more business, but it's also going to solve a lot of problems for home sellers and home buyers, right? Our job is to solve problems. Your job, my job, we're here to solve problems. And you stick out when you can offer creative solutions to complicated problems.
for sure. You're the bridge loan expert, so I'm
I
glad
try to
you're
be.
here to talk to me about it.
I try to be.
Can you walk us through a real life example, success story that you'd like to just give?
Yeah, sure. Let's see. I mean, there's a bunch of them and they're all fairly similar, right? Let's say I'll give you a couple. One was on the listing side. A realtor friend of mine, it was his listing. He wanted to accept this offer, but their offer was contingent, right? And he asked him like, "Hey, if you want to speed this up and close quicker, try calling Nick. Let's see if you can do a bridge loan, and then we can close quicker. My seller will be happy. You guys will be happy. You'll have the house sooner, and everybody will win, right?" So, client called me. Thankfully, they were very well approved. They had a ton of equity. We were able to get it done. And they were able to close their house way faster than if they had to wait to sell their house because it ended up taking them 3 to 4 months to get their house sold. And there's no way they would have closed on this purchase if they had to wait 3 to 4 months to sell their house.
Right.
You
Or
know, the
any
biggest,
other
right.
offer.
The biggest deal killer is time. The longer it takes to buy a house, the less likely it's going to happen.
Mhm.
It's more things just pop up the longer time goes on, right? And then, on the flip side, it's just so many situations where a buyer, they found the house, right? They found the right house, they got to have it, but their current house isn't even listed yet. And they need that money to buy this next house, right? And sometimes they're last minute situations. Sometimes people are well prepared, but that's typically when they call me. They found the house, they got to have it. Let's see if we have enough equity to make a bridge loan work. And thankfully, more often than not, it does work because we make it so easy for them to get approved with that bridge loan.
For sure. That's awesome.
Hmm.
Um, what advice would you give a seller who's unsure whether to sell or buy first?
Um, Talk with us first, talk with, your realtor first, but also talk with the finance person first, right? Because we're the ones that are also ultimately going to determine, what you can afford and what your financial options are. Once we determine that, then they can come back to you to go find that house and go sell their house. But until they know what numbers say about their situation, their hands are kind of tied. So talk
Right.
to me, talk to somebody like me first so we can figure out what your realistic options are, then go have fun looking at houses.
Right. And talk to someone like me because I'm always going to guide you over to a expert
Yeah.
loan officer first, and then we're going to have a consultation based on those numbers so we actually know what we're looking for. We don't want to
Set those
waste
realistic
anyone's time.
expectations, set
Yeah,
those expectations.
for sure. And then how early should someone talk to a lender about a bridge loan if they're considering this?
There's no such thing as too early, honestly. As soon as they have the seed of an idea in their mind that they want to sell their house and go buy another, um, come talk to us. We're as loan officers, we're constantly urging people to talk to us first, right? In this business, they're always going to you guys first. It's normal. It's fine. It is what it is. But it's never too early to talk to the loan officer first because ultimately, like I said, we're the ones that are determining what they can afford.
Yep.
And a bridge loan doesn't change anything about that, right? At the very worst, they're going to just know what it's going to take, how much money they're going to need for a down payment on their house, and we can determine if they can do that based on their current equity. So there's no such thing as too soon to talk to us.
Right. It's all about building the strategy to get you, the seller or the buyer, exactly what you want.
Exactly.
Yeah.
Yep. We're a team here.
Yeah. Well, that's all my questions. Is there anything else you'd like to share that I didn't get to?
Uh, no, I think we were pretty thorough on that. You had some good questions, so thank you.
Okay. I really do appreciate your time and your expertise, Nick. Thank you.
I appreciate you, artists.
All right. If I have some more topics that I can think of, I'll reach back out to you for talk about it Tuesday.
All right, I'll talk to you soon.
Have a great day.